While the currency market started to trade sideways, oil faded to hold on to gains and slid, wind down by preliminary data on China's economic growth. And that's all for now. Data showed that China's economy grew at a noticeable slower than expected clip. That's demand preliminary for energy will rise less than anticipated. And the recent OPEC-led oil production cuts are indeed reasonable. Thus, there is no driving factor contributing to higher oil prices, given that oil spent 2 months trading in the range of $72 to $78 per barrel before rebounding. A return to this area is quite possible. The quote is likely to first hit for the lower boundary of the sideways range. Last week, Brent crude oil futures ended in the red, losing about 1.8%. At the same time, the asset kicked off the new trading week with a gap down, and this indicates the prevailing mood among market participants is bearish. If the quote fixes below the 79 mark, the benchmark will most likely extend weakness. Alternatively, a return above the 80 level will make it possible to fill the gap and gain upside momentum. Meanwhile, gold is trying to stabilize in the area of $1,950 and $1,960 per ounce, primarily due to currency market stagnation. However, given that at least a local pullback is inevitable, today the precious metal may well dip below $1,950 per ounce. Its further dynamics will depend on the upcoming meetings of both the Federal Reserve and the European Central Bank. So far, there is no indication that the regulators will loosen monetary policy, so gold is likely to move gradually towards $1,900 per ounce. A primarily sell signal will be generated after the price fixes below the $1,950 mark. The Russian currency seems to have stabilized at around 90 rubles per dollar. However, it will hardly stay there for long. This week, the Bank of Russia is set to decide on interest rates and release its quarterly report on the balance of payments, which will shape further developments in the market. Thus, the dollar will move either to 95 per dollar or to 85 per dollar. Everything will depend on the current account figures and the rate decision. Notably, Russia's central bank is expected to lift interest rates to 8%, which may support the ruble. From a technical point of view, the dollar needs to consolidate above the 92 mark to extend gains and reach the level of 95. However, if the price stays firm below 90, the market will go deeper into correction territory. And that's all for now. We continue to follow developments in the financial markets. Subscribe to our channel and follow the news with us. See you soon.